Good evening, traders. Welcome to the Sunday Open. I'm your host, Craig Shapiro, here at NinjaTrader Live. I'm the macro strategist. We are entering the fourth week of war. A lot of headlines to get to over the weekend. I have a great panel for you, as always, on Sunday nights here to catch the open of the tape, and we're just waiting for it here as we get going. So S&P's open down 40 handles to 65.21. Nasdaq down 70 basis points, down below 24,000. The Russell down 80 basis points. Not surprisingly, crude oil up 1.5% to a little less than 100 now. Gold, big underperformer, down 2.25%. Bonds are weak. The dollar is opening a touch stronger. And here we go again with the same types of trading environment that we've seen really for the last few weeks here on the Sunday Open here. The fog of war continues. Equities down, bonds down, dollar up, vol up, crude up, and gold down. So a lot to get to with the panel. Have a great panel for you all this evening. Sarah checking in from Southwest Florida. The weather down here is beautiful. Farm is in Arizona, and Pax in Chicago. How's everybody doing this evening?
Great.
Awesome.
Good.
I did go to the beach today, so that's good.
Yeah, it's about that time of year in Arizona where you walk outside and 30 seconds go by and your balls are stuck to the inside of your ankle. You know what I mean, right, Pax?
Ew.
I was waiting for that later. That's funny. Yes, right. Yes, I do. I do know. That's funny. Yes.
I don't even know how we could continue, but for those of you who are new to the show, what we like to do is we like to go around the panel, or like to go around the horn across various asset classes, get the trading setups, and get the traders' views for the week and how they're thinking about the variety of different end markets. I'll sprinkle in some macro commentary and how I'm seeing things. And so if you have any questions or want us to address anything, definitely like and subscribe to the channel. Reach out to us in the chat, and we'll keep an active eye on that, and we'll get through it. But we are in the 48-hour ultimatum zone here. The president came out over the weekend and said that the Iranians have 48 hours to reopen the Strait of Hormuz. I think we're very close to being completed with day one of that here in the next hour or so. And so really until tomorrow night, they have to do something. And Iran obviously replied and said, basically go F yourself. So we're at a little bit of a stalemate. There's been some talks about back channel conversations going on, but who really knows? It seems like we are crescendoing here towards something, hopefully that doesn't really get out of control and spiral out of control, but it might. And we're here to monitor it. So, but first things first, let's take a look at the equity indices. I want to shift over to Sarah here with her charts. And Sarah, what are you thinking about to start the week here? How are you looking at the indices? And we had expiry last week, is off the board now. Quarterly roll is off the board. So fresh charts, a fresh eye. How are you thinking about things?
Yeah, Friday was pretty interesting. I wasn't expecting such a volatile day, but we kind of got a really nice down move at the end of the day. And we've been talking about, the market being more bearish, and 3 out of 4 of the futures have hit last quarter's lows, which have pretty much been our target so far for this first quarter. It's just taken its sweet ass time to get there, and not really in a fun way, which kind of sucks, but it is what it is. Even though we've had a high VIX, it's just been very every day, you got to switch your bias every day. Red days, green days, flip, 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 flip. We haven't really had any clear direction. So coming into, well, hopefully, we're approaching the end of the quarter now. So hopefully next quarter we'll get some clear kind of continuation and clear direction. But for right now, we're just going to see, we're opening outside of last week's range. We opened below last week's low, and we're starting to come back through. So Pax would call this, I'm assuming Pax would call this a bullish open, since there's basically no lower wick, and it is a bullish open because it's green. So potentially we're going to be watching last week's lows on all of them. And if we're below last week's lows, we want to be short. And if we're above last week's lows, we want to be long. It's pretty plain and simple, cut and dry. That's the line in the sand for everybody. Last week's lows. So bullish above it, bearish below it.
Yeah. Are you seeing any divergences across the indices now, or are we looking at a fairly correlated market where they're all kind of moving together?
I wouldn't say anything stands out too much as divergent. Which one was it? It's interesting because kind of on a monthly time frame, the RTY is pretty bearish, but it's the only one that hasn't taken out last quarter's lows. So technically it's relatively stronger, if you want to look at it that way, because it hasn't taken out last quarter's lows. So technically the Russell is the strongest of the four of them. And that would be like the only thing that kind of stands out to me.
But seems like a, like you're saying, a pretty minor, maybe a minor positive divergence though. Yeah, I mean, last week we had the Fed meeting. Kind of went very much as expected. No rate cut, no prospects of rate cuts. The Fed is now firmly on the sidelines, trying to deal with the dynamics of rising inflationary expectations from the move in the oil price and broadly from the move in commodities, given the shutdown and production issues in the Middle East. So we're seeing that move through the supply chain. And they seem like they're firmly on hold. Even Governor Waller, who had been in the more dovish camp and had dissented on prior meetings, basically said he wasn't dissenting, and even came out on Friday and said, he's really kind of pushed himself back into let's wait and see mode. So the Fed is really now in a position to do nothing, and really can't address or help out the markets here. The other thing that was last week was expiry, right? We had a ton of volume. We talked about this all last week about the negative gamma environment that we've been in, and the VIX expiry and regular expiry kind of holding things together. Well, that's gone now. And so those traditional supportive flows have been eliminated. So the market can trade a little bit truer now, but we're waiting for headlines, right? I mean, I don't really know how to, think about a 24-hour deadline here. I mean, I think markets are expecting, the president probably to say that, he's just kidding or something to that nature. But, we'll have to wait and see here, and we'll be head on a swivel waiting to hear from him. But Pax, how are you thinking about the setup for this week? I know a bunch of your levels were breached last week, and with the rollover, I know there's some new levels we got to be thinking about. What's the update here for us?
I'm short. And I took profit down on Friday. I took profit down to November's lows, the price that we've been talking about on this show, since November, at 65.20, 65.25. That was a great trade. And I'm still short. I have no reason to cover. Now, that said, that's those are in longer term swing accounts. My target for that trade is 59.40. My target in the NASDAQ on the downside is 21,429, 21,430. So on a weekly, as Sarah pointed out, this is a bullish open. So as bearish as I am long term, and if we open tomorrow in my my day account, I've got different accounts at different firms, so I'll trade on another account. I will be looking to buy dips until we take out 65.10. Actually, until we take out 65.05. I'll be looking to get long. Just from a day trading standpoint. Does that make sense? So from a longer term standpoint, we are not going higher. And be careful picking bottoms, with any sort of regularity or size. Standing in front of running freight trains. I'm not talking about looking for some shorter term, shorter time frame, trades to get long at, like on the reopen here, 65.05 to 65.10 in the S&P is your long zone. I'm not talking about a shorter time period like that. I'm talking about, we are going to 64.80 and I'm going to take a stand at that level. Don't take stands. That's how accounts are blown, and that's how life blows up. Trade what is in front of you. Trade the market that's in front of you, okay? Just be nimble, because this market is going to call for it. Now, NASDAQ is also solidly weak. We are below the quarterly pivots and everything. And our new macro zones, let me give them to you so I can lay them out for you. New macro zones for me in the S&P are going to be 65.94. And then that is going to target, I can't see. I got old man eyes. 64.93. Oh, shit. Don't we trade that? No, 05 as well. 64.93, take profit there, sell more underneath it to 63.92. So 64.93 to 63.92. Those are going to be the levels that we want to be. So that we're going to want to take profit at and add through. So, you've got a solid plan. This is kind of a buy the dip, little bit of a swing here, at least until we take out 65.10 and 65.05. Last week we were talking about the 200-day moving average, which was on Sunday night was 66.12, and then it's still ascending just because we're still above everything. But anyway, last week's open was also a very bullish open. If you remember, we talked about it last week live. Last week we opened at 65.08, and we bounced off of that level. I think we opened at 65.08. Oh no. 65.08 because we were still the March contract. So 66.59 in the June. So June's, when we rallied all the way up to 68.14 off of there, and that was a bullish open. And then we closed below it. We collapsed Thursday, Friday underneath it, never looked back. Okay. So, just, again, be nimble. What looks bullish on the reopen of the week right now might not be bullish on Thursday or Friday. So you have to be willing to change with the way that the price action, the market changes. And, it's funny. Sometimes on Twitter, I talk about how, some of the greatest traders I know change their mind 2 or 3 or 4 or 5 times a day. How could that be possible? And that's just the way that it is. So be careful, be nimble, be quick, be willing to jump over the candlestick.
It's been the pattern, it seems like, at least for the last few weeks here during war, where the Sunday open has been a gap down. Sunday night weakness, though, has generally been bought. We've kind of rallied through Monday and then into Tuesday, maybe even into Wednesday. And then we've kind of, failed to close the week at generally lower levels. I wonder if this week may look any different. Any thoughts on that, or just kind of see what's in front of you?
I'm short, I have no reason to cover. Bonds. Look at keep your eye on the. We'll talk about the bonds later, but keep your eye on the 30-year bonds. The bonds on Friday on the show on Friday. I was trying to show all of you guys how to get the edge on a bond trade, and it worked. The breakout point, the opening range in the breakout point in the 30-year bond was 115.02. That's the yearly opening range. Okay, that's the yearly pivot. So you're short underneath 115.02 to 113.19. Okay, 113.19.20. Friday's opening range in the 30-year bond was 113.30, the 113.31. So you're short underneath there, take profit at 20, sell more than 19. And then pay for those, take profit on them. Now the target in the 30-year bond is 111.11, and underneath there is 110.01. Underneath there is last year's low at 107 something. So there is new capital flows starting to come into this market that is going to keep these sort of tape bombs at. I will have tape bombs, but they're not going to be as thin, whippy, and choppy as they have been over the course of the last 3 weeks, because for the most part, the quarter has been done. The major positions have been taken, and now they're just waiting for the new contract to start and new capital flows. And that's going to start a little bit next week, or tomorrow. But it's it's going to kick up next Wednesday when we start the second quarter, and we'll have new quarterly pivots and everything else, and it's going to be a great trade. But right now we've got new macro zones. Just be willing to do different things and to trade different markets. I don't know. Yeah, it's the greatest business in the world. I just want you guys to be well-rounded traders.
Farm, let's kick it over to you. Wanted to get a sense for how you're thinking about the setup into this last week of March and fourth week of war. What are the keys you're looking for this week?
Fourth week of my diet, I think you mean.
Also
as can be seen in price, is going very well. My most recent weight updated, if you take that, divide it by my starting weight, multiply that by the SPX all-time high, that was Friday's low. Do the math, it's there. It's a true story. 10 handles off, okay? We'll allow for that. But I'm going to zoom us out here on a volume profile. This is the chart that I use in the profile that I use for my year ahead plan. So same levels I've been using for a while here. And as somebody mentioned in the chat, I think it was Cooper again. I mean, yeah, we're basically at the bottom of, you know, what I had projected to be a 6-month range, and here we are, 6 months. Well, I didn't project 6 months. I projected multi-month. Here we are at 6 months. It's a big ass range, is my point. And so, yeah, the break of this range with continuation to the downside is a shit show, unmitigated shit show. Almost certainly makes its way back down to a back test of the prior all-time high from February of 2025. And that could be a very bullish back test potentially. It would look a lot like the 2025 low coming in to back test the prior all-time high. It would look very similar to that. So that doesn't necessarily have to be, you know, bear market things, right? But this is the key area. And obviously I'll be able to tighten up this range a bit once we've put in a little bit more trade here. It's been very thinly traded. This can be seen on the volume profile, this 6513 to 6600 level. And then right around 66.25, I've got that almost on there for good measure. The single levels are maybe less important or less well defined here, but I do see this as just a big ass range. I mean, we consolidated sort of the upper portion above this 68.03 to 68.12 half for quite a while. That finally give way, finally flipped offer, and you can see the accelerating weakness to the downside. That same type of thing is going to happen if we start offering, again, we've been saying November lows just makes it easy, right? So if we see a push lower, maybe to 64.30s, what have you, and then we're offering November's low from below broadly this range, then I think you'll see an acceleration to the downside. So that's the big thing to watch out for there, the big picture on the weekly profiles. Bear with me, I've got a little bit of spaghetti. I'm using 68.18 to 66.22 as sort of a proxy for that 66.25 spot that you saw on the yearly chart there. I think that's going to be your key reclaim all week. You're really going to want to get back into the meat of value from last week. And, you know, bulls are going nowhere until they at least take out a prior day's high and ultimately take out a prior week's high as well. And that just like neutralizes trend. So the last couple of weeks, as Craig mentioned, we've seen Sunday night gap down, they buy it, they run it up into Monday. They start buying micro dips, like they don't let it pull back, maybe even Tuesday, and then the rug gets pulled. I mean, that's not to me what healthy, strong buying looks like. If I want to be bullish here, what I'd like to see is, okay, so we rally from here and then let them pull it back and show me that bulls are willing to defend something like 65.39 to 65.43 from above, and put a floor back down here, which was the cash hours low for November. Something like that would be okay as like a start, but ultimately reclaiming the 65.18 to 66.22 is going to be key. And this whole area up here, 68.88 to 92, and then up to 67.10 to 16, looks like it could be nasty. So I would be careful. Like if they do the same thing where they just rally it Monday into Tuesday, micro dips bought, a lot of covering going on, I would get really cautious up there. And really honestly, until they've taken out a prior week high, and then like you're still likely going to see a dip, even if that were to happen. So that's kind of what I'm watching big picture, 66.18 to 66.22 for reclaims. And then of course, Friday's low, the November low, what have you. 65.13 was my big spot, a major extension for quite a while. And yeah, like I'm not looking to, jump in and buy some dip and swing it long or whatever, if we are seeing downside traction below November lows. But I do maintain awareness in the back of my mind, just flip over that big picture chart. This is one big range. And so if we see persistent failures from sellers to pull the trigger below November's low, then there's the potential to come back in and run back through that range. So Sarah will tell you, like we have an outside quarter. I think she mentioned that, right? An outside and down quarter off of an all-time high generally does not lead to very bullish things like at all.
2022, we want to repeat. I want to repeat a 2022. And I'll talk about that in a second when you're done. Sorry.
No, that's right. Yeah. I mean, 2025, we had an outside and down quarter. And then like the first week, right, in April was a shit show. I mean, like 12, 15%. I don't know how much more it went down, right? 2022, obviously, we did not have any intervention from the Fed. We were in a hiking cycle that led to, a very large or prolonged grind lower anyways. You had
27%.
Yeah. You had 2020 that was an outside quarter and down, and it just did it all in one quarter, right? However many percent that was, just did it all in one quarter. And then 2018, same deal. It just did it all in one quarter, like 20, 25% or something like that. So like it's not the time to be like mega bullish, but I do maintain awareness. You can see there's a broadening formation here. The fact that we've taken those November lows, right? So like, do we start rallying back through this range? Like I keep it back of mind that, it could end up just being, a look below and fail or a failed break of this range. So I try to temper my bearishness because pretty much I just love stomping the shit out of this thing. So I try to temper that with an understanding of like, if this range can't break, it can't break. And we'll have to flip on them a little bit. So I'll flip over to NQ and then shut up since I'm hogging some time here. So, again, it comes down, it sits right at the November low. On a cash hour, that's the cash hours November low. Same type of deal. Big range that's been trading in here. We got here sooner. Craig was asking about alignment or misalignment between equity indices. We talked about that a week or so ago. That like ES finally caught down, basically to its range low or prospective range low for these 6 months, and it's made to me it's made trading a lot easier. The fact that they've been aligned in similar structural areas. But same deal. If we're offering these November lows and broadly this 24,069 spot, then I see this as being a shit show down towards 22,369 to 22,769. Some stops along the way. It doesn't have to be there in 1 week. But you can see how heavy this is up top relative to the rest. And this is going on a year. This is 2025 plus current. So it's sitting a little top heavy up here. And that's problematic, right? So I think the best situation for bulls, and I've said this a couple of weeks now, I think is to completely liquidate, see all that volume, just completely rinsed out. You don't want to see like a slow grind lower where the dip is bought and then it just kind of can't go higher and it just grinds and grinds, because then that's just adding fresh supply to the equation. You would rather see a capitulation, washout, send this thing back to the February highs from 2025 in like a day or two, because then the point of that is now all these trapped longs, they're gone, right? They already shit their brains out. So makes it a lot easier wow, the rating on the show is really going to be a little different tonight. Sorry, guys. That's what you want to see. You want to see that violent puke, and then it would lead to a ferocious rally. If and when that happens. Now, is that a bear rally to then proceed lower? Like, we can talk about that later. But, for now, that to me would be a lot more of a bullish situation. For NQ, drilling in a little bit tighter, there's 23,885 to 23,900 was the spot that I was looking for a potential look below and fail of Friday's low. And the November's low. So far, that is in place. So I'll be a little bit cautious on the short side. PAX has reasons to be cautious here on the short side. I have reasons to be cautious down here on the short side. It is prospective range low, and I'm respecting that as if that is the case. But again, on rallies, if the character of the rally is similar to the last couple of weeks, I'll probably ultimately be looking to step on it. And this 24,357 to 24,380 spot is going to be the key reclaim for me, like the first order of business key reclaim, just like the 6618 to 22 on ES. Let's see if it can get back into some of the meat of last week's range, right? So if we just come up here and we end up offering 357 to 380, and like all these buyers from last week, all again, are trapped off sides, and every week to the left of it, then they're going to have to liquidate, I think. So that's going to be the key reclaim. It's going to be all week. And then same deal. Do we get a downside break with a continuation? Do we not? Do bulls step in and buy this? And then again, like you don't want to see the V rally Monday into Tuesday with these shitty little micro dips getting bought and P-shaped profiles, because I'm going to step on your ass if that's the case. Like, let it pull back. You want to rally, let it pull back, buy the dip, show me strength from buyers in that manner, not just, short covering into a high because we're just going to step on it. So that's what I'm watching, the biggest levels. You can copy down the rest, but and then I mentioned on ES like that I'd be super cautious. Similar structural area, 24,691 to 709 up into 769 to 796. Anything up there, especially if we're rallying in a straight line, to me, I'm looking to step on it. This is a situation here where I believe testing higher first and failing is a lot more bearish than just trading lower. Now you can say, okay, well, we gapped down, sure, but we haven't even opened on Monday, right? So, I mean, if this is a situation just like last 2 weeks where it's just rally, 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 that has potential to be way more bearish than just puking out lower. So that's where I'm at, big picture.
Yeah, makes sense. Sarah, you mentioned maybe looking at an analog back to 2022. What were you thinking there?
Yeah. So in 2022, if you go to the yearly chart, here. This is what happened in 2022. We went outside year, and so in 2022, we took out 2021's highs by just a tick, by just a little bit, and then started coming back into the previous year. So this outside year first started with an outside quarter because it has to, and then continued down and took out 2021's lows. Now, I don't know that we're going to get that this year, but where we stand right now, that's what it's trying to do, right? So it took out 2025's highs by just a little bit and started coming back in. So if it can stay down, we could possibly see an outside year, which means taking out last year's lows. So that's what I mean about, and we're trying to go outside on the 6-month chart. And then this is a 3. So this is so 3s are broadening formations on lower time frames because you take out the high and the low. So by default, it's a broadening formation. And once we start to fall back into that range, we're likely to go take out, the other side of it. So this could be, like a repeat of 2022. I don't know all the economic stuff, I'm just the chart girl. But yeah, like this, for me, like this would be cool. I would love it to go all the way down here. And then I'd, buy a bunch of long positions in my IRAs, but I would short it all the way down if I can. And that's what I hope to do, but we'll see. We got to take it, quarter by quarter, month by month, because continuity and things change, in week to week, everything changes. So, but that's why we're here every week.
Yeah, I mean, the analog back to 22. If you think about the oil price move, right? I mean, with the Russia attacking the Ukraine and what happened in the energy markets back then, crude went to north of 130, and the inflation that we saw and what it meant for the Fed. So I guess to see some fundamental macro analogs, I think are interesting. I wanted to just shift to last week's sector scorecard here before we get to crude. I do want to go back to Sarah for crude, but if you can see what we had last week, and this is a great new feature on the Ninja charts we created, this market performer, and you can do it for any stock ETFs or for futures or whatever. But week to date performance last week, not surprisingly, best performing sectors were the energy sectors, right? XOP up 5.5%, XLE up 2.8%. And on the flip side, the worst performing sectors were gold miners down close to 15%, XME, which is the metals and mining ETF, down 7%. And then the interest rate sensitive ETFs like home builders, utilities, just broad housing and staples, down around 4% for the week. So pretty still wide divergences led by energy. Strait of Hormuz remains closed, production issues in Qatar, and in a variety of other areas for LNG, for oil, for refined products, kind of across the board. So that is the critical supply chain choke point that we are all dealing with. The president wants the Strait of Hormuz reopened. It's not exactly clear how that's going to happen. He's threatened. I think we're 25 hours away from him destroying every power station in Iran if they don't open the strait. So a lot of back and forth there. Just a quick look here as we come up on the half hour of futures. Not surprisingly, we've bounced off worse levels here. Russell now is up at scratch. S&Ps are basically flat. NASDAQ basically flat. Bonds are a touch lighter. Crude has flipped negative now from being up over 100 now to being down 1%. I don't think there's been any headlines since we've been on the show, but it just kind of shows some of the volatility that's going on. Gold is down 1%, but up from the 4 p.m. close on Friday. So cash gold is higher, but futures gold is down. And the dollar is mixed, a little bit stronger against the euro, a little bit weaker. So really not too much going on. It's again a kind of a quiet-ish Sunday open. here. But let's flip back to you, Sarah, on crude. Right, crude's clearly been driving everything, and an understanding of what's going on there. Clearly, 2 weeks ago we spiked up towards 120. We've since given back some of that. We talked last week about whether or not that was a blow off top. One thing we did see last week was the back of crude really moved higher. So D's 26 and D's 27 crude were much stronger on the week. And so as we've seen the curve change there. But what are you thinking here on spot crude from a charts perspective?
Yep. So last week, we did have this big giant candle 2 weeks ago. So last week on the Sunday Open show, we said that more than likely we would be an inside week. And that's what we did. We stayed an inside week all week last week. And currently we're opening inside week this week. They did do it on a gap up. And you'll notice kind of the correlation, like the oil's gapping up. So typically gap ups are for selling, right? And the futures gap down, they're buying that. So kind of an opposite correlation right now. But we are double inside week. So these orange lines are the levels. So we need to either, in order to break out, we need to be above 102.44. And if we're going to break down, we need to be below 91.45. And again, these could fail. So these are always the line in the sand. So you can be bearish below that and bullish above that, right? But if they start coming back below, then you can have outside candles. So I kind of would expect, more than likely, the first move would fail, and then we would potentially get an outside week just to kind of, make the range a little bit bigger inside this big consolidation area and kind of get like a broadening formation going in here. Because right now it's just been sideways, right? Like it's not going anywhere. And we expected this because of these 2 big days. So we're going to be stuck inside this range for quite some time, I feel like. And we have been this whole time, 2, 3, 4, 5, 6, 7, 8, 9 trading days already stuck in this range. So we could just play around in here for a while. So don't have a whole lot to say about it other than that. Yeah, we're just kind of in trouble with this big range is all.
Gotcha. Pax, any key levels you're working on here or looking at for oil?
No, I haven't. I missed this entire crude trade, and so I've been kind of staying out of it and not preparing myself to trade it, because then I feel like in my life, when I have chased missed trades, I have not had good results. I don't think anybody does. And so I really am just kind of letting it go and just kind of watching how it plays out. I see all kinds of projections on what, what crude is going to do and, what's going to happen. And, I don't know. I saw somebody write that the Marines are going to be taking Carg Island soon. Iran is not Iraq. I don't think taking Carg Island is going to be as easy as many say or think. I hope it is. I hope for, I don't know what I hope. I hope for a quick resolution to this war and without too many Iranian lives being lost, Israeli lives being lost, or God forbid, especially American lives. I pray for peace. So I don't know. With that, crude can go to all-time highs. Crude can go back down to $67. I don't know, man. It's crazy. I'm excited about the bonds. I'm excited about gold, and I'm excited about the indices. And this is, as we said at the beginning of the show, a bullish weekly reopen. We can trade back up to 65.94. Up and between the reopen here, in the S&P, between the reopen and 65.94, there's not really any clear direction in the market. We take out this open, this weekly low, and it's going to be off to the race to the downside. We get above 65.94, we will trade back up to 66.58 and 67.96. So I don't know. Crude has been a great trade. It's been that is the most sensitive market to headline risk, or to tape bombs, I think, and so I just don't, I'd rather not trade it. It's too dangerous. And for me at this point in my career, I don't need danger. I'm in capital preservation mode. I'm looking for reasons to trade less.
Right. Farm, I'm curious. We've all had to become more, crude experts, chartists, traders here. How do you incorporate crude into your process? And are there any key levels that you're watching here to either trade crude or to look at crude as a signal for what you're doing over in indices?
Yeah, I mean, you definitely have to have the 5-minute chart of crude up, or whatever time frame you trade on, equivalent on the equity indices. So I've got a few levels on here that I've been watching, and I just don't see a whole lot of reason for anything else just yet. Sarah mentioned it's going to be kind of hard to get outside of that 3-8 week. So we're going to be stuck inside that for a little bit. But for me, consolidation above this 91.63. What is that? Clearly a typo. 91.69 and 93.07. I see that as broadly constructive. I think if we're offering that, and especially if we get back below 89.69, 88.69, then this can puke out and will probably actually, head towards the lows of that 3-8 week. So this, to me, this area is sort of a major pivot, I guess. I hate using pivots personally like that, like long above, short below. That's not how I mean it, but I would suggest that sellers would have the advantage below there anyway to potentially force a retest of the trailing week low. And I think building volume above this 98.8, not just these weak pops that get stepped on, right? But building volume, time and volume above these 98.8s and seeing, this week overlap value higher relative to last week, I think that would be a bullish look to potentially clean up some of the thin structure that was left behind during that trailing week sell-off. So I don't think it's necessarily going anywhere, but I'll probably be monitoring. I think equities find some strength if crude is offering these 91.60s broadly. And I think as long as it's holding above there. So it's kind of one of those war is over, maybe a little bit more war situations, I guess, like I did a few weeks ago with ES. So yeah, below 91.69 and offering that, maybe the war is over. And above there, I think still some more war. So I'll definitely be watching that, but not super interested. You might find some nice rotational trades off this last week range. So I might consider picking off some day trades or something on it. But that's basically what I'm watching there. So I see this is broadly strong still above this 91 call last week's low, really, as long as it's holding above last week's low. And then, if we are building volume up above these 98.8s, then I think, we're looking at higher prices to come.
Yeah. No, what I'm trying to figure out is, which asset class is going to diverge first. We've seen this highly correlated relationship with, volatility up, crude up, stocks down, bonds down, dollar bid, gold down. At some point, one of these will start to diverge from this pattern, maybe give us, some signal that either a resolution is coming or, further escalation, is coming. So keeping an eye on all of it. But, we're halfway through, a little more than halfway through here on the Sunday Open. Wanted to just engage a little bit more directly with chat. If you all have any questions for us, please feel free to drop them in there. Let us know what you're thinking on the tape right now and how you're thinking about the week, or if there's any asset classes you want us to address. We are going to talk to gold. I know people are interested in gold, but before I do, I just want to mention that after we're done here, at 7 p.m., we have the crypto closeout with Trader Mayne and Ponzi Trader. So definitely stay tuned for that, for an updated view on Bitcoin and the crypto markets and how those guys are reacting and trading to what's going on in the geopolitical sphere and how crypto is related to that. So definitely stay tuned to listen to those guys. But as far as gold is concerned, look, this has been something that I've gotten wrong here. I would have thought gold would have traded better amidst all the geopolitical uncertainty. We talked about last week just the blow off that we saw in precious metals earlier this year. And so we've been digesting kind of sideways to down here on precious. Gold has outperformed silver, palladium, and platinum, but still has really been trading more like a risk off asset than not. So it's a little bit strange, I think, in light of maybe the degree of crowdedness that we had in the gold market and how many retail folks seem to be trading earlier this year. Maybe we're just blowing some of those guys out, but Sarah, how do the charts look here for gold and for silver, and what are you thinking on both of those?
They're playing out as expected. I've been talking about a potential outside month all month. Because just like I keep talking about all the time, and this is why the strat is so good, because you've got clear line in the sands, right? So above last month's highs, I said we could be long, below we got to be short. So we got below last month's highs and we're looking to take out last month's lows. And then if you go to a smaller time frame, we had a great entry. We had inside weeks last week, which that's just an inside bar break. I mean, that's pretty, easy to do. Inside bar down, they're trying to take out, what is this? February lows. And silver's doing the same thing, except it did not take out, wait a minute, maybe it did. Yep, same exact chart, right? So it's trying to go outside month because it's failing to stay above last month's highs. It's trying to come down here. And it had this same setup last week. So we call this a simultaneous break in precious metals where, they're both going inside week and down. So they both kind of, I hate to say it, like shit the bed together, right? So you could short either of them. And again, they're still trying to take out this pivot low and knock out, people's long stops. Anybody who's been long since sometime in February, once we take these lows out, they're going to be gone. And then, I don't know. Then once we get down here, we could come all the way back up. I don't know. We have to see what happens once this low gets taken. Farm calls it, what do you call it? A failed breakdown, I guess. That's kind of what we call it. It's kind of the same thing. So we'll have to see, but that's where it's trying to go right now. They're trying to go take out those February lows. It's pretty, basic chart, strat chart stuff, outside bars.
Yeah. Silver as well looks.
Yeah, this is silver.
Sorry. Yeah.
Yeah. Same. They're the same exact chart. Like literally.
Yeah. PAX.
Yeah, I mean,
oh, sorry.
Go ahead.
Yeah. Let's go over to farm. Farm.
Okay.
What are you thinking here on gold and silver?
Yeah, I was just going to add, I mean, once we saw that move higher, and how frothy it got, it really had started to act like a high beta asset. So you have that perspective, where I think equities down, precious metals down was reasonable to ponder. And then, I think you mentioned a couple of weeks ago, maybe it's been longer than that, too old, can't remember, but just how a lot of players were positioning collateral, in precious metals as opposed to bonds. And so, well, now you're getting a little bit of a scramble here for cash. So I think this is a healthy washout. I am bullish longer term on precious metals. And I agree with Sarah that taking out that February low would actually be a very, very healthy thing. Just rinse out all those stops. And I see a spot maybe around 43.69 to 43.80 range. That'll sit just below that February low. Maybe something like that could produce, a failed break of February's low. We start coming back through the range, but at least within, last week's profile, you've got this lower high here at a very, very obvious structural spot on a volume profile, some thin structure above there. So that's going to produce a range from roughly that lower high here to, let's call it 45.40s. And so you could probably trade that range two ways. If this, move here, is given back and we reclaim range, could see some strength up to that lower high. Could be a short back down from there. But generally, I, kind of like equities, I think the best thing is just to rinse out all of those longs, because then it makes the volatility of the upside that much sweeter.
Mm-hmm.
Yeah. PAX.
Agreed.
What are you thinking gold?
Oh, gold's been a great trade. I don't know how many weeks back we outlined this, or months back. Well, I'll tell you actually. 50 quarter is the halfway point of this range. 50 quarter, it's just a fib between the high of 56.20 something and the low of 54.23, 56.23 and 54.20, 56.26 and 50 and I'm sorry, numbers get jumbled in my head. 56.26 is the high, 44.23 is the low. and the halfway point of that is 50 quarter. And crude has been trading gold has been trading in $90 ladder rungs, $185 swings. So you're short below 50 quarter, and you're going to take profit every $90 and add under every $90. That swing takes us down from 45.75 down to 44.85. So if 44.85 holds, as it did tonight, we opened up at I don't know what the opening print was 44.5, broke to 44.46 and held. Okay, so you can use that as as a kind of Farm don't like pivots, but that's all I use. So we get down to 44.85, and I wouldn't buy shit here, but you can sell them underneath there for a trade. I would love to see gold trade back down to, ultimately I'd love to see gold trade back down to like 38 to 40, or even as low as the, the massive breakout point of 33, like 33, 35, 34. I don't think we're going to get that low. But I own gold. I own a lot of gold. I want to own more gold. I just don't want to own gold here. But from a short side, gold has been a phenomenal trade from 50 quarter all the way down. So it's just all it is 50 quarter minus 90. And talked about it last week and the week before when we were actually trading there. We were actually trading there, and I outlined, you can go back and watch this show. I outlined these exact trade all the way down here. So 50 quarter minus 90 takes us to 49.35. I even retweeted, I even had them reclip. I believe it was last week. I even had the Ninja producers clip that part of it. So you're short under 50 quarter to, well, this is past, but write these down because you're going to be long above them as long as 44.23 holds. 49.35. So, always round it out to the upside. Minus 90 takes us to 48.45. Minus 90 takes us, this is simple. Ladder rungs, dude. 47.55. Minus 90 to 46.65, minus 90 to 45.75, minus 90 to 44.85, minus 90 takes you, to 43.75, 44 even, okay? So trade those levels, and you got a solid trade plan. You would have made 600 points on the trade and still short some. I don't know what more you need, Yeah, you need, Sarah and I talked a million times about, you need to be able to define your risk. If you know where you're wrong in the trade, then take it. I don't want to trade gold at 45.05 or where we're trading at 07. But if you can define your trade, I am going to be short from 50 quarter. I'm going to take profit of 49.40, and I'm going to 49.45, and I will sell more underneath 49.35, and just swing them down, right? Then you've got a solid trade plan. If 44.23 holds, swing it back up. If we take out 44.23, then we've got some more downside. I think we do have more downside, but we have to take out those February lows. If we don't, you trade them back up.
Gold likes the money print, right? Gold likes when it knows that the Fed is cutting rates, extending the balance sheet. Global central banks are in easing policy. Obviously, there's some concerns about dollar strength, and right now we don't really have any of that, right? I mean, we've had this energy inflation, a pickup in inflation expectations. The expectations for rate cuts in the U.S. this year have completely been washed out. There's actually some expectations of hikes, which is crazy to think about, given Trump been yearning for lower rates forever and is unlikely to want his newly appointed, if that ever happens, Fed chair ever to cut rates. But the markets are looking at the potential for rate hikes, and then overseas, the ECB and the UK, which are single inflation mandate central banks, the expectations are for the next moves to certainly be hikes. And we could find ourselves in a situation where these banks are hiking rates into an energy spike similar to what they did in summer of 2008. So it's a very different dynamic from where we were only a few months ago, when the expectation was for easier policy, not only in the US, but globally, and that inflation was well contained and on its way back to 2%. Now we've completely thrown that out the window. And I think gold is not loving that environment. The other thing is in the dollar, right? We've seen the strength in the dollar. The XY has moved a couple percent since the beginning of the war. Folks are certainly, off sides on that regard. We've, to start the year, it's been mostly a get out of U.S. assets, get into EM assets, commodity assets, cyclicals, small caps, value, anti-dollar trades. And so, over the course of the last few weeks, with the war premium coming back in, I mean, the country that is most the strongest here, relatively speaking, is the U.S., right? We don't really get our energy from the Strait. We are generally self-sufficient across a lot of commodities in the energy chain and petrochemicals and the like. We are able to still use our cheap gas to export products globally. So relative beneficiary in the U.S., I think, has helped the dollar, versus energy importing countries like Japan and Europe and the UK. And so I think you're seeing that dynamic play out here across the gold market as well. So it's interesting though, given the geopolitical, that we haven't seen gold kind of do, what it normally does. But
that's scary. Doesn't that bother you? Doesn't that make you a little bit more bearish here? We're starting to see a cross asset liquidation, aren't we?
Yeah, it makes me more bearish on other assets, right? I mean, the fact that gold isn't catching a bid, to me, suggests that the traditional ways you find bottoms with government intervention or central bank intervention really are not there. Now, clearly, we have this geopolitical uncertainty, and we don't exactly know what the Trump administration is going to do next. But I think what the gold market is saying, it's saying do something soon. Right? Don't let this get carried out of control here, because the longer we go with the Strait closed and Iran bombing petrochemical and refining assets in the region, the more likely we're going to have a longer, protracted inflationary problem later. The other thing, which we haven't even talked about, and we don't generally talk about, is food prices. The fertilizer trade is grinding to a halt, and we're moving into summer, planting season here, where farmers will be putting down fertilizer in the U.S. and there is none. Or prices are up 50-70% over the course of the last several weeks, and so we're looking at the potential for a food price shock later this year when the crops and the yields don't show up. So that's a longer term dynamic that the Fed will have to deal with, later on. And I suspect, we're going to see more cross-asset risk-off type trading until we get some resolution. And again, it's not clear how that's coming, despite all the tough talk from the administration. But
exactly right, exactly. Even Bitcoin's being sold off, bonds are being sold off, gold sold off, silver sold off, SPOOs are sold off, Nasdaq sold off. I don't know.
The pace, though, I'm curious what you guys think. I mean, at least for tonight, it seems a little bit quiet, right? In light of the fact that the president did put on a 48-hour ultimatum, which is supposed to, go off the clock by the close of business on Monday. And I don't know. I would have thought asset prices would be moving a little bit more than they are right now. I mean, basically, we have S&Ps down 13 basis points, 65.50, Nasdaq 24.065, similarly down 15 bips. The Russell down 7 bips. Bonds a touch lighter. Oil is reversed down from being up 2% to now down 45 basis points, but quiet. Gold is down 1.4%, but still up a scratch from where it was at the Friday close. The dollar's flat, mixed. It seems quiet. It almost seems like a lull is over the crowd, waiting for the next headline or waiting for the next missile attack somewhere. But I don't know if you guys feel similar to that. We did have a big move on Friday. You're right. We did have a big move on Friday into the close with big volume because of expiry, right? It was a $5 trillion or so notional expiry coming off the board. We know that the futures rolled last week, so there was a ton of volume on the tape, and big moves lower. Just seems quiet to me now.
I expect it to be. We don't have a lot of data out this week. We have some earnings. We have some, so we're all just sitting here waiting for the quarter, the fiscal quarter to end, and the new quarter to begin. Which for futures traders really kind of starts tomorrow. So it's just, we have to your tweet earlier about the black Monday analysis. Now, tomorrow, he did not mean tomorrow. Read the damn tweet. He meant the setup, the overall setup. And I agree with him 100%. Now, as from a trading standpoint, this is a bullish open to the week. And if we are below 65.94, and above 65.05, I don't want to trade it. We get above 94, I'll be long. We're below 05, I'll be short. I already am short. I'll add to shorts. But I expect that we're going to trade back and forth within that range now until the war gives us reason to break out, or some sort of a capital flow, some greater liquidation in gold, or something happens that continues to push us around. So, but between those levels, I want nothing to do with it. Nothing. That's it. But then again, please, all of you have to understand is that I'm an old trader, and you don't see too many bold old traders. I am not so bold anymore. I've accomplished my goals. I am capital preservation mode here. So, you younger guys who want to be involved in the market, you younger men and women who want to be involved in the market for these 15 handle swings and the SPOOs, or 65 handle swings and the NAS, go ahead, have at it. You've got pretty good risk definition here, so have fun. So I always caution. I'll always talk caution and always advise caution, because that's what's gotten me this far in my career. And when you are cautious and you trade less, you make more money. Everybody ought to have this written, on your screens or tattooed on your arm. The less you trade, the happier you'll be. So, trade less, look for better setups, manage your risk, learn how to manage your profit, and learn how to add to your profit. Don't ever add to a loss. Add to profitable trades.
Yeah. 5 minutes left in our show, but coming up at the top of the hour, the crypto closeout with Trader Mayne and Ponzi Trader. They'll get through everything crypto related, but I did want to touch on Bitcoin before we close out here. Maybe Sarah, if you could throw up your Bitcoin chart. I mean, it's been it had been holding on and showing some signs of strength. It's a little bit weaker over the course of the weekend, kind of breaking down from a multi-week consolidation zone. How are you thinking about Bitcoin to start the week here?
Bitcoin.
I think Sarah might be muted.
Yeah. Can't hear you, Sarah.
Maybe her sound going. I don't know. Maybe Farm. I don't know if you have any thoughts on Bitcoin while we try to get Sarah's audio back up and running again.
Yeah, I mean, it's still chopping in a range. It got a failed reclaim of that 2025 low, 74.4s or whatever it was. And now here it is, still just broadly chopping between, 60 and 74. So it's going nowhere from my perspective until it finds some strength back over last year's low, or obviously breaks to a new low. So it is weak and it is heavy, of course, because it's lacking the liquidity normally provided by my caloric excess. But I mean, good news for bulls. The producers were just in my ear, and they said I have to stop losing weight, because we had been doing really, really well with a demographic of women 80 and older with severe macular degeneration because of my presence on the show. And they need me to stay looking as much like a gremlin as possible. So I don't know. We'll see. Maybe I'll have to cut it out and eat some food.
Never mind those old broads. Lose that weight. They're getting in better shape. Live longer. You'll live to be that old.
I'm a huge fan of the correlation between your weight and the S&P. As you know, my bias here has been for softer asset prices to kind of force out the administration to back away from these endeavors in the Middle East. I mean, I think last week we saw the equity markets kind of get shaken a little bit more. But now with the VIX expiry behind us and options expiry behind us, I think the market has the ability to trade truer this week. Pax, you mentioned kind of not a lot of macro going on. Just to look at the calendar. I mean, Tuesday we get the weekly ADP numbers. Wednesday we get a flash PMI in the U.S. Thursday is initial jobless claims, and then Friday is the UMich sentiment survey final. So really kind of grade B and C type data points. I don't really think anyone is too concerned about whether or not those data points come in one way or the other. We have about 8 or 9 Fed heads speaking this week. Powell's not speaking. Waller's not speaking. So really nothing there. I think some of the comments from Powell at the press conference were interesting. He basically said that he's not going anywhere. As long as there's a lawsuit out against him, he's going to stay at the Fed until that lawsuit goes away. And so the reason that's important is because it makes it harder for Trump to get his nominee, Kevin Warsh, into the seat, because Senator Tillis has basically said, as long as there's an investigation going on, then there'll be no hearing. So we're in this kind of bizarre dynamic here as we move into April, and Powell's term as Fed head chair is done at the end of May or middle of May, that we don't even know if Warsh is going to get in there. So kind of some uncertainty there. And I think Powell's comments that he may stay on helped soften the front end of the bond market here. We saw, two-year yields kind of spike higher, and all the interest rate cuts for 2026 move out. So a very precarious setup here as we enter the fourth week of trading here for this war. And I don't know. Last thoughts here, guys, before we go. But the markets are again quiet. S&P 65.46, Nasdaq 24.043, down 25 basis points. Crude basically back to flat. Gold down. Gold's basically flat from the Friday close. The dollar a touch stronger, I'd say. Bonds a touch weaker. And that's about all she wrote here. So I want to thank everybody again for joining us on the Sunday Open panel. Have a great week trading. And now I'll kick it over to Trader Mayne and Ponzi Trader for the crypto closeout.
Hello.
Well.
How's everyone doing? Welcome back to the second episode of the crypto closeout every Sunday. I'm Trader Mayne. We're wearing the same sweater, bro.
Dude,
We're wearing the same sweater.
I realize that's epic. We really are wearing shout out
Mind meld. Shout out. Well, speaking of Kraken and NinjaTrader Live, thank you so much for sponsoring the show. So we're really excited about today's episode. Ponzi and I are going to go over the charts here, talk about our thoughts, and then we have a guest coming on, Luca Netz of Pudgy Penguin.
Dude, unreal. Honestly, everybody, we actually planned that. We texted each other. That was 100% on purpose. This was not an accident. Once again, shout out Kraken. How you doing?
At least
man?
I got the breakout hat on, so there's a little bit of differentiation here going on. So
I'm not diversifying. I'm all in.
I was listening in for the last half hour plus there of the show on before us, and it seems pretty doomer out there. It seems pretty scary. I saw your tweet announcing the live stream today. You're selling the Pokemon cards. You're selling the watches. What else are you getting rid of, man? Is it over?
Dude, honestly, I don't even want to verbalize how bearish I am. Like, I am very doomer. And every day it gets worse. I don't think this war ends tomorrow. I think this is a multi-year war, and it's gonna make, everything's inflated beyond belief. Our watches are up 10, 20x, our houses, our cards, cards are trading all-time high. I think it's just a good time to sell assets. So I'm really bearish, man.
You telling me Logan Paul selling a Pokemon card for $16 million isn't bullish for the Pokemon card market? That's crazy.
Isn't that chaotic?
I'm of the same mind. I mean, I've been talking about this for a while over the last couple of weeks here on stream. Like, I just think that the likelihood that this quagmire, that I think is what's going on in the Middle East now, resolves quickly is like pretty low, especially if America goes like boots on the ground. I just don't see how that's good for the markets or anything at all. I mean, it's good if you're sitting in cash, if you're maybe short the stock market, but generally, I think this is giving me kind of COVID-esque vibes where everyone knows something's wrong. Maybe some of the cracks are starting to show, but we haven't had that big event yet. Like, yes, equities have started to roll over a little bit, but we're still at 6,500. It's not like we've had a 10% down candle or something like that. And Bitcoin, you'd like to think, has front run some of that downside. Let's quickly hop into the charts. I'll kind of share what I'm looking at here, and then I'd love to, kind of see your thoughts. So I'm quite bearish macro for similar reasons to you. We talked about this a lot with our last guest, Folis. Where do we bottom? When? Maybe end of this year, maybe in the 30 to 50K region on Bitcoin. I still do believe that we can get something like this on Bitcoin before the next leg down. I don't know if that is the top. I mean, we have all of the kind of makings of, I shared this chart on Twitter of this being the exact same range as the prior one, where we traded above the range high, closed back with inside, broke structure to the downside, and then it's just a straight line down. And this is almost, almost identical price action. So there's an argument to be made that Monday morning, we wake up and stock market is down huge, and Bitcoin is following suit. But I'm still holding out hope that we get some sort of one more leg up or relief bounce. I would like to short a lot closer to 80K. If this was it, that's pretty disappointing. And I likely just think that means that the downside we're about to see, that bottoming number is going to be lower than maybe some people are expecting. What are your thoughts on Bitcoin?
Yeah. I think the first thing I want to point out is that we're not really seeing that Coinbase premium that we saw last week, right? So we're not really seeing that execution, which we had from supposed sale or speculation, of course. So this Sunday has been a little different. For why, I don't know. But what matters to me is really how oil has been trading the last 2 days. And I'm not really excited for this week. Like you are expecting any sort of pop. I don't even think we'll get it at this point. My honest anticipation is, I think I drew it out here. I think we're like right here in terms of price action, right? Like I think this is what we're seeing here, and we're going to see this next leg down to cause some pain across the board for coins, whatever it is. But yes, my anticipation is probably a pop into Monday. This has driven itself into a nice volume area, a point of control, I might call it. Anticipate anything up into the 73, 74 regions, but I'm really not. I wanted this move we got last week. I was expecting to go all the way to 80, 78, 80, at least to this area of traded volume, like right up here. Didn't even get it. Right back into this range, kind of how you and Follis were anticipating. And now we're kind of trapped. So unless we're back above 73, I don't even anticipate 78. I honestly am just going to look for shorts. And I'll look for shorts anywhere up into here, honestly. I don't think this high gets taken. And I think we trade probably into the 50s. And I honestly, this is a complete intuition, gut feeling, but I think it's going to be headline driven off of some sort of attack. Troops deployed something. It's just kind of teetering into this range, and something's going to have to break the range. And oil's going to. I still think crude trades at 150 in the next 90 days.
So, are you trading crude? So I know, like, we're crypto Twitter, right? So anything's happening in the world, like, we're experts. And I mean this kind of tongue in cheek, because there is a surprising amount of very smart people on crypto Twitter who, like, I post something about like, oh, I'm gluten free. I have all these people who are like, oh, I was struggling with this, like, do this and this. But at the same time, we also think we're experts on things that we have no idea what we're talking about. Now, I always say I'm aware of my ignorance. I don't pretend like just because I've had some success trading crypto and maybe some other assets as well, that I am capable to be trading oil right now. I'm of the mindset, looking at the oil chart based on what's going on in the macro, I'm not touching it. Yes, I know it's available to be traded, on dexes now. Everyone's like, oh, I'm trading Hyperliquid. I'm 1V, like Thread Guy, our boy. I'm 1v1ing Scott Bessent in the order books. Like, I just know sometimes when to sit out. I think Pax on the last section mentioned, as you get further into your career, trading less is actually a good thing. You'll make more money. I feel like I'm there with my trading. I know you, my friend, are a little bit more of a button clicker still. So are you aping in and out of oil or what?
So last week, or about 10 days ago, I did take this oil trade. It was the first oil trade I took. I longed 85, closed around 97, 99. And I haven't taken a trade since then. I want to take a punt on oil again. The risk reward is not really providing itself for me because we're kind of in the middle of this choppy range. I'd love to see a jab back into the 90s to go long again, but I genuinely believe that the current global circumstance we're seeing is not going to be light for oil. I really think crude is not going to make its way across borders as easy as it has been. And we're seeing those effects today. I just filled $5.90 gas tank down here in Florida. So
that's in freedom units, guys. I don't know what that converts to, liters up like the rest of the world here. I get it. And I think I read an interesting post about someone saying, listen, like there's a lot of countries like in the UK where they're still massively reliant on oil and gas that they need to import. Like this can become a problem where people don't, like, energy prices get so high, people can't heat their homes. I know summer's coming, but does it ever come to the UK? We don't know. But they can't heat their homes, can't afford to fill up their cars, can't afford food, groceries. It's just another form of inflation that we seem to be dealing with. So I agree. It's scary times. I'm from just a purely chart and like time cycles perspective, I actually do think we're due for a bit of relief before the next low on equities. So I've been short. It's about 6,900s on the S&P for weeks now. It's finally broken down, but this has been a pretty controlled demolition so far. It's bounce, slightly lower low, bounce, slightly lower low. And I think we're going to continue that pattern until this thing really opens up. So I think for crypto, it's a tricky spot. I think there's two kind of minds. I see a lot of people on Twitter talking about how, now's not the time to get bearish. We're already so far off the high. All of these altcoins look like they're bottoming out. I just think you want to be very careful in these types of times of macro uncertainty. Crypto's not nearly as sturdy, I think, as some people seem to think. And if we do get that big down candle, because again, to me on the S&P, like we're breaking down here, but this is not like the nuke. If you go look at either of these two prior tops, it starts with this kind of orderly breakdown. Then you get that relief bounce, and then the real hammer comes, and it was no different, way back here for COVID, and who knows how low we go. I'm still holding this thing full size, no intention of closing it. So I kind of welcome.
Puts are expensive right now too. If you're trying to shop for insurance,
I could totally see this floating back up before having another big leg down, and this catching a lot of people off guard. And then maybe you and I get that move to 80K, that we were talking about. But for now, I'm trading less. I resonate very much with Pax, who was on this previously, but that's me. I'm at a certain point in my trading career where I'm looking for certain opportunities that I feel like the risk reward's asymmetric and my edge is present. I think in times like these right now, yes, there's volatility. Maybe you hit a home run, but there's also a lot of things that are out of your control. And there's already so many things out of your control in trading that I'm being much more cautious here. I think that some people who view this as maybe the time to be really locking in. I'm like, I'd rather some of this stuff be less headline driven, less macro driven. And we're not there yet. I mean, Trump tweeted out an ultimatum saying like they got 48 hours to open up the Strait of Hormuz or else, basically. I don't know. That just seems bad. And it seems like I don't want to be risking my money when a tweet like that can come out on the weekend and have a dramatic effect on price.
Obviously you started the show by stating that you are a macroeconomic expert and everything that you believe is mostly true. And it really becomes a binary thought process when it comes to trading in this perspective. Do you think the Strait opens this week?
No. Well, no. I'm going to say no.
Then it's hard to be long. But yes, I agree. The headline can come in the next 24 hours that it does open or close, and either side gets blown out.
I think it's much more likely we get a headline saying like Iran saying they're going to do it, and then they just don't, right? You know what I mean? Like, so the headline brings that. And this is what I hate about these types of markets right now is like, I don't want to be trading the headlines. That's not what my edge is. I'm more of the, I want to trade at my level when price gets there. And we're just not really at any levels that I'm interested in right now. We're in the middle of a range. Don't diddle in the middle. Let's see what happens when Monday opens.
Yeah, I agree.
Are you looking at any altcoins at all?
Dude, I'm so glad you asked, because
anything come across your desk right now that you need to tell us about?
Swear on my life, I just bought a token yesterday that I never thought I'd buy again. I had what's the best chart for this that has the most price action history? Maybe Polynex? No.
Oh, is this I want crypto Jamie special?
Yes. Yes, actually it is. I want full chart history because if you saw, I'll just draw it out. This is what it looks like, right? does this, and then it pumps here, and now we're back at like the top of that range. And Kita team is still locked till 2029. So I nibbled. I'm not gonna lie. I bought like a solid amount, more than I would have allocated in any other day, around 16 cents last night at like 2
So
a.m.
just to confirm here, possible World War III happening right now in the Middle East. You're super doomer bearish. You're selling your watches, selling your Pokemon cards, but you want us to know on the 30-minute chart of Kita coin.
Yeah.
You're bullish because the team's locked till 2029. I love it. Only can a crypto trader long Kita coin in the face of certain disaster for the global markets. Unbelievable.
And you can see my execution, dude. That's the worst part. Like, this was all me last night.
Yeah, we are the most optimistic people on the planet. Speaking of optimists, what a great segue. I'm getting good at this. We have our guest coming on right now. So Luca Netz, we'll let him give an intro. But dude, it's good to see you sandwiched between two Krakenites here in our lovely Kraken swag.
Excited to chat with you guys as always. Pleasure to be on here, and let's hope some of the things you guys are saying are wrong, but probably not likely.
Well, maybe this is a good place to start because you're in crypto, but like you're not doing what Ponzi and I do. You know what I mean? Like we're tapes to the chart or slaves to the chart. Like we're looking at our phones at dinner, checking price, monitoring the situation. Like you're building an actual company. Do you pay attention to any of this kind of stuff when it comes to like what you do day to day for work? Or you're like, hey, we've got the vision, we know what we're doing, and it's just like marching forward every day?
Yeah, I think there's probably like two parts of the business. I think most of the business is ran that way. I think there's an element to the business where I kind of like address the elephant in the room. And the elephant in the room is like I have an ecosystem of millions of people that are bought into, financial, or things that have a financial element to it. And, it's my job to make sure that the things that we're working on have the highest impact, for some of the assets that they are exposed to. And so there are things that we do or won't do depending on the market conditions. But I would say 80 to 90% of the business, we have to keep doing business. We have to keep announcing partnerships. We have to keep moving the needle forward. Like we have KPIs and objectives we need to hit. But there is probably like a small cohort of initiatives that we work really hard on that we kind of release when I think the markets are hot and that our community and the people who believe in us can get rewarded, for that hard work that not only we put in, but they put in to help us get those deals.
Yeah, as the CEO of OpenSea hear that? That's how you do it there. You launch when the market conditions are good and optimal. I think they're about 3 years too late. Totally get it, man. I mean, you're running a business, like you said, you've got employees, you got things you got to do, but you're a crypto company, kind of at its core, at least its beginnings. So there's always that kind of tie to the general vibe of the market. At least I feel, maybe Ponzi, you can chime in and let me know. I feel like as far as bear markets go, this one feels more lively. Like people are sticking around because I feel like there's so much going on and crypto's so entrenched in, mainstream now that it doesn't feel like before where it's just a complete ghost town.
It kind of just started though. Like if you think about it, from a price action perspective, we're just a few months deep into what we would consider this bear market. Luca, I guess that leads me to ask you from a purely marketing and media perspective play, like, are you seeing as much excitement in partnerships with Igloo and Pudgy and Pangu as you were seeing last year? I'm sure you guys had all kinds of, brand deals going across the board for that entire year. Is that excitement still there?
It's a barometer, but the barometer actually sits in our favor. When things are good, it helps a ton. When things are bad, it doesn't fall off a cliff because we have other parts of the business. So it's a good pendulum in the sense that it doesn't swing too far in the other direction. It usually is just like a net pro. But like the elephant in the room is like, dude, like our X engagement, how much product will move on a drop, like totally like, if the market is at all-time highs, it's a completely different form of engagement than if the markets are at the lows and kind of shitting the bed. So it's a little bit of a catch-22, but we don't get the worst side of the pendulum, which I'm thankful for.
That's good to hear. I need another hat, by the way, dude. I lost my Igloo hat at some point.
You.
So
tons coming your way.
I still have two massive Pudgy stuffies sitting in my mom's storage locker in Florida that showed up at her house on pallets that she's super excited about. So I'm just waiting to
Yo,
get those
I'll
shipped
I'll
here
go
at
pick
the
one
end of
up
the
from
day.
her because I need one in that chair right over there
Okay,
for the
there you
show.
go.
And I can sit there.
You guys, anytime you want anything, you just send me a text and it will get sent. I actually have a pretty big gifting campaign that I'm planning for the summer, so I'll make sure I get both of your guys' updated addresses and send that over.
Amazing.
Hell yeah.
So
Well,
go for it.
while we have you, is there anything? Obviously, you're a macroeconomic expert as well, and you've been studying war and politics for 100 years, right? What are your perspectives on, I guess, both equities and then, since I brought it up earlier, um, collectibles and collectible pricings? We just talked about Logan Paul selling a Pokemon card for exorbitant amount of money. What are your thoughts there? What do you
Yeah,
think?
it's super interesting. I'm definitely not a macro expert to say the least. I actually thought risk was going to get on. It was going to get on sooner rather than later, and I actually thought, we probably would have seen probably the later end of the Trump presidency being bearish. Now we just hope, he brings it back before it's all said and done. I will tell you an interesting learning, just like pure pattern recognition that I think I'll share, which is, I mean, it must be 10 for 10 at this point, but like crypto always front runs equities, and it's like every single time. And it's almost like you can see the writing on the wall, and there's probably like such a big trade to be done. I got to start building conviction around this pattern because the pattern it's too clear to me that like every time we have big drawdowns, equities hold and then they follow soon after.
Yeah.
And it's just like really free money if you can trade it. But it's to a T, so much so that if you take it even a layer deeper, memes, obviously the category that we kind of play in with Pengu, memes always draw down before everything else.
Yeah.
And then major crypto, the majors in crypto then draw down, and then equities draw down. And then the greatest signal for risk on is the memes always pump first, and then the majors pump, and then the equities pump. It's like just staring at it for 18 months now. It's like so crystal clear. And even if I look back at the trend over the last like 7, 8 years where I've seen both equities and crypto and kind of paying attention to the two, it's such a glaring like line. Like it sound like TradFi stays delirious longer. And I guess probably because the positions are harder to unwind and there's more variables and financial instruments in play that kind of prop things up, options, things like that. But it's fascinating to watch, dude. Like crypto always front runs equities, and equities always kind of revert back to the mean that crypto kind of sets in the beginning. So good little piece of alpha that the listeners can kind of just begin to pattern recognize it. And I think you guys there'll be an open trade. Like, I should have sold equities 2 months ago. It was pretty obvious once, things started to implode. And now here I am selling at the, probably gets worse, but at a local.
Dude, tell the story about how I called the perfect top like 4, 5, 6 months ago. Do you remember that?
You called the perfect top. So part of my job is like talking to guys who I think know their shit and just getting a finger on the pulse, right? Because like to the point, there's like 15% of the business that we kind of lean into like how we think macro is going to shake out. And before like I unload those clips, like I got to make sure that like my barometer feels right. And so Ponzi's one of those people that I call occasionally that I think is a good take. And he completely called the pico top of crypto, and he didn't even take his own advice. He was still sized in, but he knew, I knew too, and I didn't take my own advice. I didn't take his advice. We didn't do anything on the actual brand side, but just personally, it was just like, it was so glaringly obvious. And I think I even called Ponzi or the weeks before. I was like, dude, this is just too nuts. Stocks are too nuts. The last time I saw stocks do this, I just like was back in the last bull run, and I was just hoping that crypto would kind of follow suit, and that's what I was kind of holding out for. And like we'd see a little bit of crypto mania like we saw back in 2020, but we got no crypto mania, and stocks kept on ripping, and we kept on buying the new legs up of these new AI companies, and kept on fucking drinking the Kool-Aid, and here we are today.
Nothing new, huh?
Do you think that part of, because like I talked to a lot of people who think that like this bull run for crypto was like a failure, like, oh, this was the worst bull run ever, even though we have a lot of like, I guess, bigger picture positive news happening in crypto in general, in terms of how it's becoming more and more mainstream. They're talking about it in high levels of government now, but I think a lot of people judge the bull market on whether or not they made money or how many opportunities they were to make money, like we didn't have alt season, quote unquote, this time, according to some people, even though we had a lot of alts that did really well. Do you think that's just like the market maturing, or do you think it's part of it is, these crypto traders are saying, hey, I can go and trade equities instead and participate in the mania, a lot longer where things are maybe a little bit more predictable?
Yeah, well, I think for the average Joe, it was really hard to kind of go back to crypto when AI was a thing. Like when you think about like the risk on speculative asset, like AI was really the place to kind of, play if you were just that average Joe retail trader. I think the bull market was definitely not the bull market that we were used to, where basically anything in the top 100, 10x, and all you had to do was pick your battle and which shiny coin you liked on coin market cap, and everyone looked like a genius. I will tell you this though, this bull market was a very good bull market if you were under 25. And why I say that is because if you were under 25 and you were in that 18 to 25-year-old range, you're terminally online. You come from the Fortnite and the video gaming, and those kids absolutely cleaned up in Solana meme season. I don't think I saw more 20-year-olds worth 8 figures in my life than some of these like Solana meetups and these rooms that I were in. Obviously, like I'm in relatively in that age group, so I'm familiar with these guys. I mean, I was just at a get together a week ago, and 3 4 20 something year old 23 24 year olds talking about how they made 20 million on Trump and 15 million on Melania, and 20 million on peanuts, and 10 million on that, and another 25 million on this. It's pretty
Crazy.
incredible, pretty incredible. And you even still got people like Cupsy cleaning up a couple million a month. So it really just depends. Like, was it a bull market like we were used to? No, and it was not nearly as easy. But if you were just terminally online and you were fine with a couple pimples on your face and Doritos for dinner, a couple of those kids, a couple hundred of them made out like super bandits.
I just
Insane,
wonder if it's
dude.
different, right? It's just different. Like,
It's
and
different.
it's like, this is the new thing. They Fortniteified it, right?
Yeah.
Where it's like, oh no, this is now skill based. It's not like just throw a dart, like you said. And, as long as you hit the board, you made money, maybe not as much as the other guy, but you still made money. Here it was like, no, you had to like actually know how to play darts. Like you had to
Yeah.
be like, and these kids have been playing a lot of darts, and you haven't been. So I think that's part of just what the market is. It's becoming more PvP on those other coins. Yeah, I mean, if you don't adapt, you kind of died this cycle. I think like the idea of like, oh, I believe in this coin and I'm gonna hold Link because it's such a great project. It's got all these parts that they don't care anymore. It's like, what's the runner for today? And then I'm
Yeah.
gonna sell it tonight, and then I'm gonna rotate into the next one. And yeah,
Whole
to be
different
25.
battle of
Yeah.
attrition here than it once was. So, but I mean, it makes sense when you think about like quantity of coins back in 2020 to quantity of coins that exist. It's like power law is going to play a factor in a couple coins. That's about it. The rest is the trenches was actually a great term for it, because if you think about it literally,
Everybody dies.
you're everyone's dying, and
Yeah.
and a couple are making it out across the fucking finish line and winning the battle. But talk about a frame that makes that really is analogous to the whole situation.
I mean, I think we're
Trenches
heading
different.
into this society now where you're speculating on everything, right? Like, on Kraken, you can do more than just buy and sell spot now. There's companies like Polymarket and Kalshi. There's sports betting apps that are like letting you bet like you're playing a dating game, like you're swiping yes on bets, and like
What is a Diddy game?
a dating game.
Oh,
You tell me what a Diddy game is. I know you've been to a few, but so it's like it feels like this is where we're heading. The trenches was the same thing, right? Where it's like, okay, this is like gambling on steroids. Is that something you think about while building your business? The attention spans being shorter and shorter. How do you market to these new generations of people who have, dopamine, serotonin overdose from being online all day?
Yeah, I think like my strategy internally, at least from our ecosystem of assets that exist, like it's always been a marketing game and a game of attention, like always keeping relevancy. And I think like, power law does fall into effect in a world where I think memes will always be popular. I think there will always be a ton of coins that will be popular. Like you just have to be in that. It's a different trench, right? But the trench is for attention. And, so much of our superpower is that. And so much of what we focus on is around just like, look, price is a lagging indicator. Price always matches up, especially in bear markets. Like price will never match up what the fundamentals to what you're doing. But if you stay consistent, if you stay top of mind when the bid comes back, right? Like you're one of the most trusted, credible things that people want to bid and rotate into. And I think we've kind of established ourselves that if people think like, okay, risk is on and memes are run, like you got Pepe, you got Pengu, and you maybe got, one other, two others. And at least from the big major caps, like we will continue to, I think, establish ourselves as a leader there. But it's so different, dude. I mean, the person in the trench is it's a different cohort. They're a different buyer, right? Like they're, the person spending 15 hours in the trenches is not necessarily buying Pengu. Maybe they'll buy it, if they see a trade, they see an announcement, but those guys don't hold. That's the most fascinating thing. They do not hold at all. Zero.
No.
They are not holders. They are traders, and they are in and out, and they are ruthless, and they're young. I'm like, where do you get this ruthlessness from? Like, was your dad a hedge fund guy? You grew up on Wall Street? They are just like innate because the gaming, it all comes from gaming. Win
100%.
or lose, champion or not champion. And they're just programmed with a level of EQ that's just like so desensitized and just like no belief, no conviction, win game, lose game.
Yeah.
And that's all they process. And they're kids, dude. Like they're kids. Like they're literally kids. You had some guys come up to my office, 16 years old, and a Pista. A Pista is not what a Pista was 5 years ago. Pista's $1 million car today. He bought it. He's like, yeah, I bought it with his Richard Mille. I'm like, oh my goodness, what's going on over here?
Is that not a little sad? Just to make us old guys feel better, being like, well, when I was 16, I was like having fun. But maybe this is what fun is now. I don't know. Maybe like that's just the definition of wash. Like I can't play video games anymore because I'm like not good enough. It's not that they're not good. I suck now.
What's sad is the inevitable lesson they're going to learn, that when you make big money that easily, you're going to draw it down, right? Whether you're spending it all on bullshit. That's the sad part. But man, I'll shoot you straight. There's not a single person on this call or listening to this that wouldn't have made millions of dollars when they were 16 if they couldn't have. The problem is how you make the money. You make it the money in the easiest, and I wouldn't say easiest, but in a way that's easy to them. And so the destiny of 99% of them, I can tell you unequivocally, like they will blow it, right? And there's one or a couple that won't, and those kids will make it out the best. And I've talked to a couple, and I try to mentor them. Every time I meet one of these, I tell them, I'm like, look, I've been there because I was 18 and I made a lot of money when I was 18 in e-commerce. I was like, you're going to blow it. And you do not want to blow it. Buy some real estate. It's a liquid. It's a savings account. Like you just want to have a savings account. Go buy some bullshit so that the money doesn't come out. And I try to tell them to put it in bank accounts, but I found there was actually a person at our company. Here's an interesting story at Pudgy Penguins. He was like 24 years old. He made like $500,000 in the trenches. I didn't mind. I want every employee at our company to succeed. So if I find out you're hustling in the trenches on the side, as long as you get your job done, I really don't care. And he kind of looked at me as like a mentor. And I was like, look, dude, put all of this money, get it out of your trading wallet and put it in your bank account. He did it. And then he put all the money back from his bank account into the trading wallet and he blew it all. And he's in debt now. I told him, I'm like, dude,
No.
stop it. Stop. Yes. But I just see it all the time. You've got to put the money. If anyone's listening to this, if you make money in a big way, in a way that, you probably, is too big to even fathom, and you've got it and you realized it, you got to put it in a place where you can't touch it. Because you got to understand you're not as wise and as smart as you think you are, right? You had a skill set, you took advantage of it. You maybe preparation meets opportunity, got a little lucky, right? That's all fine. Everyone does that, but like you got to put it away in a place where you can't touch it because the casino will always draw it back. And that's the sad part in the equation. It's not actually the money making. And like, dude, I spent way too many hours on Black Ops and Warhawk. I made no money. I just had a lot of fucking.
They just weren't paying back then.
Yeah,
could have been a streamer in today's day and age.
That's the hardest part.
Agree.
Is knowing when not to trade. Like everybody makes a lot of money when it's hot, and then the hardest part is stepping away from the table because they're looking for that, same return, and it's gone. And then that's when everything just, that's when the spiral begins. And I mean, they'll have to learn it. And the thing is, if they learn it the first time, will they repeat that same mistake? And that's the thing about us like multi-cyclers. Like if you've made that same mistake every cycle, you might be doomed.
For
You know,
sure.
then it's a psychological game of your own.
I mean, Ponzi, you had a huge drawdown. I don't know. I mean, you know, what I mean, when you were younger, you fucking blew it up.
Oh
No,
yeah. No,
sorry.
I've zeroed. I've
Bring
zeroed.
it up. Yeah.
I've zeroed twice.
Yeah.
The second time zero was, you know, slightly larger than the last zero, if that makes
Right.
sense. But
Well,
yeah,
because you were smart, because you did little things, like you had equity
yeah,
in little places, right? And that's the
exactly.
saving grace. That's the best advice I can give you guys. Like
Yeah.
Greg Cardone will be like, the stupidest thing you can do is buy his house. The smartest thing I ever did was buy houses. The second I got money, because every time I drew it down, I had equity in the house, and I knew
Yeah.
it wasn't for nothing, and I could always get back up on my feet. It's probably the best allocation of money I could possibly think, especially in a world where it's so much about keeping up with the Joneses. Comparison's the thief of joy. Social media makes us compare everything to everybody. We're never really fulfilled. You know, you could sell your business tomorrow, shout out Mayne, and then like the next thought you're thinking about is like, wow, this guy sold his business for 10 times, and it's just like a perpetual doom loop, right? And that's the world that the world gives us. So you just gotta, you know, one, find solace in whatever you've got, and park if you're fortunate enough and blessed enough to make a huge trade and bust a big win. There's actually a great book. But I bring it up. But in this spirit, in this vein, because I do think this is a productive conversation. There's a book that I read recently. I think it's the best book ever. It's 100 pages. The words are big. You'll
What is it
probably
called?
2 hours, you'll clean it up. The Richest Man in Babylon. And it's basically the story about Babylon's probably the greatest, probably pre-America, but the greatest wealth, you know, ecosystem of humankind prior to, you know, obviously the Great American Revolution. But like how, and it teaches you 7 things, 5 of which will be very obvious, but they're really well eloquently put in this like fable. And so it's like a little story that you kind of walk through. 2 hours, you can bang out the whole book. But there's a couple things in there that even me, who I thought was super sophisticated, I thought about it and I was like, that was really obvious. And I lost a lot of money not doing that. And I can't believe it fucking took me this little book to see it. It's a great book, the best book, if I'm being frank, for any beginner looking to accrue wealth. The Richest Man in Babylon, super easy read. I know some people don't like to read the fucking dissertations. It's a very easy read, and it will blow your mind. If you have the same impression that I did.
We
Just
we
wrote it
need
down.
we need a TikTok AI account to summarize it in 60 seconds for the kids watching it.
While
So they
showing
get-
a game up
yeah,
at the
exactly.
top
While showing
summarizing.
whatever the game is at the bottom. No, I think that's fantastic advice, man. I mean, as someone who's been in this game a long time, multiple cycles, made many, many, many mistakes. A mistake I never made, regretted taking money out and not redepositing. That was always one of the smartest things I could do and make the money real. So I always tell people it doesn't feel real. Like I have a much harder time gambling at the casino than I do in crypto. Because in the casino, I'm holding these chips. They're tactile. They're in my hand. I'm like, oh, this is $1,000 I'm about to put on a table here. I know what $1,000 can do, but when you're playing in the trenches in these meme coins, like, oh, it's a couple soul. Like you don't know how long, and I think we're desensitized to this. You talk to the average person, they're like, wait, you lost how much on a meme coin?
Yeah.
So I think that's great advice, and it's great that you're doing that for the young kids you're coming into contact with. Because I wish I had that. I mean, I learned the hard way most of these lessons, right? Like you had life-changing money and you didn't change your life, and you're like, oh no, now I got to do it again. And we sometimes mistake skill and luck and timing. It's like, did you know what you're doing? Are you a genius, or were you just a bull in a bull market? So take profits. Not right now, though.
The easiest way to frame it is like it's not realized until you put it in your bank account and never touch the bank account and put it back in. Like as long as if you can be disciplined on that rule, I think a lot of people will listen to that and be like, that makes a lot of sense. Whatever your P&L is redundant. I don't care if you fucking draw it down in cash in a fucking exchange. It's whatever you put in your bank account is what you made. Everything else is fugazi.
100%. So Luca, what's next for Pudgy and Pengu and Igloo? What are you guys looking forward to this year? We've been doomers this whole time. Let's brighten up a little bit.
Yeah, for the last 4 years, we've been trying a lot of things, testing a lot of things. I can tell you, it's ironic enough because the market's so shit. But the health of the business, and I don't want to harp on it too much because obviously it feels a little insensitive because like, you know, market's shit, everyone's losing money, but the business has never been clearer. Like the path to making hundreds of millions of dollars a year selling Penguin products. I know exactly how we're going to get there. I know exactly how we're going to do it. And it was actually just a little bit of repositioning. We've obviously sold products and done it really well, but we've really built like a cult around this pink and blue. And we've always sold like a kind of a hodgepodge of just like penguins, right? The NFTs, things like that. But there's a deep affinity around these pink and blue characters that we have, specifically around like the relationship. And so, Ponzi, I know you're in a relationship, Mayne too. Congratulations on the wedding. But I want this to be the brand that, like, when you want to get your girl a gift, you get her a Pudgy Penguins gift. And when she wants to get you a gift, she gets you a Pudgy Penguins gift. I want it to be the brand for couples, the relationship collector. And I think we're just like in an open ocean that if you think about it, it's like, yeah, what brand is really servicing that group of people? And that group of people really spend a lot of money on gifting one another things, whether it's husband and wife, boyfriend and girlfriend, etc. And we've just naturally over the years inserted ourselves in that market just because of our content. So a lot of girlfriends send the boyfriends the Instagram reels and vice versa, and the gifts, and kind of like the form of expression in the digital world is that. But our products never match that framing. Now we finally like struck a chord where like the product matches the framing and the audience that we've built over the last couple of years. And like I'm so confident I can talk to you guys 2 years from now, and it'll be like hundreds of millions of dollars in annual revenue. And I think we're gonna, put a case study for the history books here.
Hell yeah. How many employees do you guys have now? How big's the team?
Across the entire Igloo, just under 200, but at Pudgy Penguins, probably like 110, 120.
Wow, nice. That's
What a
exciting,
story.
man. It's awesome that you've been able to branch besides digital assets. You know what I mean? Like what started as a proper non-fungible company has really taken storm. And I know you have a background in fungible stuff. So
But you're like the
it would be easier.
trailblazer for sure, from someone like
Yeah.
taking a crypto specific thing and now branching out to the mainstream, to the rest of the world, to other industries. And it's super cool to see, man. It's been an unbelievable journey. We got a few minutes
And thank
left
you guys.
here.
I just
Oh,
want to
sorry.
chime in. Maine, Pons, you guys supported me long before people fucking were supporting me. So it's people
Oh
like you
yeah.
guys help me get to the finish line at least here. So thank you.
Dude,
I'm not
of
gonna lie,
course.
quick story. When I first saw you buy Pudgy, I was like, oh no. I was like, what's the play? Like, what's gonna happen now? Was at the top of the NFT market, and you did a very great job with what you built. So congrats.
Unbelievable, bro. We got a couple minutes left here on the guest segment. We thank you so much for coming on. Is there anything you want to leave us with? Positive words, stuff to look forward to this year, come from Igloo, Pudgy, anything at all?
No, just hold us accountable. We're going to do amazing things in a world where the financial markets are collapsing. Hopefully, we bring everybody listening here some joy, whether it's through our content or our products or games or new things that we ship. Got a bunch of things that I think we'll have to ship at the end of the year, regardless of what the market does. And to everybody listening to this, you guys are in good hands. Trader Mayne is an exceptional human being, one that's always supported me. And Ponzi, even I've built a closer relationship with Ponzi just because he's so local to me, and what a great human being pointing through. And I trust these guys with all, not financial advice, but I trust these guys with all the advice. They're people that I call individually for advice. So you guys are in good hands.
Thank you so much for coming on, brother. Appreciate you.
Thank you guys. Be well.
What a guy. I hate that we're matching, man. Can you text me next time?
Literally, like the moment it showed us on either side of him, I'm like, this is too funny. Maybe what needs to happen here is we need a pink and blue Pudgy, and Trump needs to get one for who's ever in charge of the Strait of Hormuz at this point, and they can make up. Oil prices can come back down to earth. We can go on onwards and upwards and up and to the right on the chart.
Imagine the
Maybe
headline,
that's all
man.
it is. It's like that Pepsi commercial back in the day when it was like Kendall Jenner or whatever. It's like, here's a Pepsi to stop the war. Well, maybe it's a pink and a blue Pudgy.
You never know until you try, right? You already have the know by not trying.
You never know. Well, that
Thank you.
was Luca Netz, obviously one of the, I would say, arguably one of the more successful founders in crypto, who's now branched so far beyond. I mean, Pudgy Penguin is absolutely everywhere now, and it's super cool to see them continue to build and see what it's grown from, literally being an NFT company. And again, this is one of the reasons I'm bullish on crypto. Macro high time frame chart aside, is seeing guys like Luca, stories like this. We've talked about companies like Hyperliquid. Like, there's cool stuff coming out of crypto. Just because the meme coin that you bought and you thought was the next greatest thing didn't do well, doesn't mean we're not making moves, and Luca's making big ones. So we've got 15 minutes left here. let's go through a few more charts. I think the people
Yeah.
want to know maybe what we're looking as we come into a new trading week here. So I've got the hype chart up here first. We talked about this a little bit last time. Everyone knows Arthur sent out his newsletter, very well written as always from Arthur, basically saying hype, $150 Yahtzee. There's a little bit more in there, but Hyperliquid's buying back tokens at an unprecedented rate with the vast majority of their revenue, and they happen to be a very profitable business. I really like hype as a token. I think the business is great. I think the stuff they're doing is awesome. I think 150 is a potential price target for hype at some point in the future. But if I'm not mistaken, Arthur was saying like April. And I just don't see it, because if the rest of the market is going to go down, regardless of how great hype is, if Bitcoin's going to $45,000, hype's not going to 150. It's just simply not the case. That being said, we are at a pretty big retest here. So I'm looking at this on the 3-day chart. We had this really nice low get taken and then a very clear shift here. Once you get that big body candle, big fair value gap there, this to me is like a sign the bulls are in control. This was right where Arthur bought. He obviously started shilling once it was away from his entry there. And we've now broken through and made a fresh higher high. So I think if you're a bull on this thing, depending on what the rest of the market does, I do believe that a pullback within this kind of price leg, whether it's really shallow or it's deeper, I want to look to buy. I'm going to assume this is a sturdy uptrend here. And if we get drawdown in Bitcoin, this thing's moved up enough that, it can draw down 10, 20% and still be very healthy in terms of putting in a higher low, not, completely retracing this move. So I don't know about you, but this is a coin that, we'll see how the market's open. We'll see what Bitcoin wants to do. But if we get a decent drawdown on hype, I think this is a buy. As we come down into kind of the low 30s here, it's just a retracement of this price leg.
Yeah, I'm in the same exact camp. I think Hyperliquid is not going anywhere tomorrow. And what that really means is it's probably going to be one of the leaders in the next cycle. And, we have opportunistic times like these to accumulate tokens. My only concern still to this day is the amount of tokens that were airdropped and the amount of unrealized P&L across the board from holders. That paired with uncertainty, to me, this is a lower high. And I can't go about assuming that higher highs will be formed until we really see an entire shift in the market. So I sold my Hyperliquid that I bought in the low 20s, high 30s, or high 20s like 2 days ago. And that's just as a trader, right? To me, the reward is not as exciting, because as we're in a format of just putting in lower highs on every asset that I've seen today, like this, I have to treat as a lower high until further notice. So yes, I agree. We have support here that we're testing right now. So if the entire market turns around and we get a big bounce out of majors, we get some sort of clarity on the war, then this is an epic risk reward trade where you can simply invalidate like right through here, but you need that momentum from the rest of the market. And I think if we do get that momentum from the rest of the market, then Hyperliquid's probably going to be one of those leaders. And if you put up your spaghetti charts and see what assets are trading the fastest, highest, Hyperliquid will probably be the one I try to scalp or long into any sort of headline. But I can't really swing spot positions right now. I'm just not super comfortable. If my entire perspective changes tomorrow, if the Strait opens, if we get any sort of bullish headline, but I don't see it.
Except for Kita coin, obviously.
Yeah, except for Kita.
Impervious to the Strait of Hormuz's open to close status. Listen,
dude,
I agree. I think any bounce across the board on any asset is lower high. Something Luca touched on that I think is very accurate is we totally have seen certain cryptos come out of the bottom in risk on moments, in moments where the rest of the market is going to bounce. Hype is consistently one of those coins when the markets are looking good. To your point about the spaghetti charts, it's oftentimes, if not one of the market leaders coming out of bottoms, bouncing on, even if it is into a lower high. So it's one that I've always got on my watch list. So I see you got the lit chart up here. I think you talked about this potentially as a
Yeah.
reclaim last episode. Just
I
never
gave
came
it
to
up last
fruition.
week, dude. When I gave up all my longs, I gave this up thankfully in profit, but not by much, barely break even profit. And I'm glad I gave it up because I'm just looking at it now and it's disgusting. But I mean, if you look across the entire watch list, nothing looks exciting. But yeah, this one has been relentless on the selling side. And I thought fair market value was a $250 million market cap, but I think the market is completely exhausted with perp dexes, which sucks because we have a few more TGEs in the next 60 days. We've got EdgeX, which is going to have a token generation event, I think, in the next 10 days. We have Extended, which is going to be in the next 2 or 3 months. We just had Paradex, which the market absolutely roasted, didn't care for. So as more perp dexes start launching and essentially, exhausting all the participants, I'm not excited for others. Thankfully, the NATO rewards don't represent a perp dex. So I'm still bullish on being a NATO trader, participating in that ecosystem, because that really ties back to Kraken's performance, not NATO's itself. And I mean, look at this, dude. This chart sucks.
So one thing about NATO, I think, just to touch on quickly, is even though maybe there's some perp dex fatigue, whatever it is, and what NATO's airdrops can be related to aside, at the end of the day, like when people are looking for free money on the floor, it can be as simple as trading on a place like NATO. Right now, yes, the markets are not the most optimal conditions, but to me, my experience so far with NATO has been that it's being underfarmed, because the same amount of points are being given out any week. And I've had weeks where I've done very little trading and I've been like, wait, I got that many points for taking like 3 trades. So crypto is one of those places where you can get paid just by using protocols, using the actual thing. NATO is one of those things that I still think it's like, hey, if you're looking for a way to get some money, it's participating in these airdrops. I know you're very good at that, making sure you're trying everything out, because who knows, right? Maybe one will be the next Hyperliquid, or even if it's not, even if it's 10% of what Hyperliquid is, it's money that's on the floor.
Not only that, I also realized that people don't know much, because I tweeted something about NATO the other day and they're like, NATO's going to zero compared to Hyperliquid. And I'm like, you can't compare Hyperliquid and the NATO reward system, because NATO is going to reward you on ink, and ink is Kraken's layer 2, not a perp dex. So people don't even know. And obviously there's not many risk on participants who have money left to play the game. So you're competing against a smaller pool of individuals.
Totally.
And that's what might make it.
Survivability, and Flood actually mentioned this on a podcast he did. I can't remember who it was with. But having capital is sometimes the biggest edge, right? Like the biggest alpha is just like you have money, dry powder, when others do not. I know a lot of people, me included, when we were at the bottom post FTX, I wish I had access to more money, because I knew that the market was bottoming. I was positioned in cash, expecting the market to bottom. Just happened to be the place where I was keeping a lot of that dry powder was what created the bottom. But being in the room, paying attention and having dry powder at that moment, that was the biggest edge there was. Forget charts, forget all that other stuff. It's just having the money and the opportunity. And I think we could be approaching those times now. Those generally are how bear markets end. It's like the people who really profit, who really do well, are people who were smart enough to realize some gains in the bull run and then can redeploy, when things are cheap or when things are depressed. Speaking of depressed, the gold chart, I think a lot of people...
I haven't even looked at that, dude.
Yeah, it's not looking great. I think a lot of people were expecting this to just continue. I had marked out this area kind of on like the 12-hour chart saying, hey, it's got to get above here, this break or whatever you want to call it, or it's going to just be a lower high. And now, in my opinion, we're coming into a pretty significant zone here, because you have effectively this kind of last parabolic leg, which has now formed a lower high. So to me, this is critical support, because if we now break below here, this to me becomes like a high, lower, lower low, like big high time frame market structure shift. Whereas right now, as ugly as this looks, if we're able to find support here and push up and make a fresh high, this high time frame trend is still intact. So again, a lot going on in the world that definitely can affect gold's price. I think a lot of people, based on the fact that we're entering, some sort of conflict. We're in a conflict. Maybe it's not World War III, but it could be a precursor. Thought gold might be continuing its parabolic ascent, and it's kind of not doing, what I think some people were expecting, which is like, wait, I thought this was like the asset to hold during geopolitical uncertainty. But this chart, silver too, looking a little dicey. I don't think it's over. I think they can maintain these trends, but they're kind of coming up to critical areas right now.
Yeah, dude. Look, we got 6 minutes left, and honestly, I think the volume is dead. I think the market's really waiting for a headline. Obviously, Trump telegraphed that headline, or an anticipation of a headline, within 48 hours of that message, and it's we're rolling around the 24-hour mark. So tomorrow should be a very volatile and dicey day. And I tweeted earlier, I said lay off the leverage for the week, because you could have the right idea going into the week and just get stopped out highly based on volatility. It's going to be a very interesting week, and that goes for crypto assets, commodities, equities, whatever it is. So I'm honestly entering the week with no position, but I have a thesis, and my thesis is I'm looking for oil longs and crypto shorts, or vice versa. I'm going to play the extreme for either direction. If BTC sweeps the lows really early in the week, then I'm looking for longs. If we get a positive headline in terms of resolution and clarity from the war, then I'm looking for shorts. Really just going to play whatever the market gives me on either side. I agree with you. Don't diddle in the middle. We are in the middle of this range right now.
Yeah, I mean, perfect opportunity to shill my company breakout. Downside risk. I mean, my gosh, if you still want to trade, but you don't want to risk your whole stack, trade with a breakout account. See, I never forget the plug. But seriously, I mean, yeah, this is one of the biggest, I think, USPs of prop firms in general is you have the ability to trade to capture that volatility without having to risk, your entire stack, because there's that evaluation fee. That's your max downside. I agree on Bitcoin. Like if we early in the week come down here and take out range lows like 60K, I think that's probably something you got to look to long. We could be in one of those situations where it's just like, this is just the range for the foreseeable future. Yeah. And until we get some sort of resolution or escalation, unfortunately, with what's going on over in the Middle East there with Iran. But I'm going to hold out some very, very small amount of optimism that we can get one more push out of this thing, because I would love to short up around 80K here. Just have this be like a 1-2 third drive there, along with stocks getting just a little bit of a relief rally. And that's enough to suck people in before the real rug comes off. But for now, unfortunately, this is looking eerily similar to how this last range ended. And if that's the case, we're about to enter the elevator and it's not working, and we're going to go straight down. So big week, insert Barry Silbert meme here. Should be a fun one though.
Dude, my concern with this bounce thesis that we have comes from not the best indicator, obviously, but I have too many normie friends who are over allocated to stocks, and the immediate response I get from them when I ask them to take some profit is, I'll sell on a bounce. You know what I mean?
Is this that one friend I met when I was down there?
Yeah. I don't even want to call him out. He's one of my best friends. And what
a beauty. But yeah, he showed me his brokerage account. I was like, you should definitely take profit.
Yeah, that was the top.
No, it's going to keep going. Completely unrelated to that guy. Let's look at NVIDIA and Tesla. I think this is one of the cleanest charts actually in the market right now. We topped right into earnings, right? We had this spike up that basically ran all these highs. This is earnings day here, dude. Right? So entire timeline, super bullish, right into earnings on NVIDIA. And now you just have this very clear setup. To me, this is the exact same setup on the Dow Jones. Like
that's a massive short. Like
this is your invalidation, and anything here is a short, because if it breaks below here, it's toast.
I might pile shorts at any bound. Like obviously we're still technically in a range, but that is a glass floor. And if we get any relief, I'm honestly setting alerts right now. If we get relief, I'm shorting the fuck out of this.
This is the same as how like this is a super common topping pattern across all markets. I use this same pattern to short the S&P here. It's the exact same setup on the Dow, right? I drew this out. This is a handful of streams ago. I was like, hey, if does this not look like NVIDIA, but just not yet, right? clear move up, consolidate in this range here, and then this floor doesn't exist, and it just nukes. So Tesla, I think, looks the same as well, where you just have that clear run of the high. I would like to see a bounce on Tesla because we have this like very kind of grindy down. I would love to see a move up above some of these highs, and then the next leg lower. But a lot of these charts to me look pretty ugly,
Dude.
and pretty toppy.
I'm like, I bet put premiums are so expensive and IV's probably out the wazoo, but I'm shopping NVIDIA puts. We got a minute left.
Yeah, guys, we'll try and end on something positive here. As much as things look doom and gloom and bad, etc., as someone who does track cycles quite closely when it comes to trading crypto, trading Bitcoin, I am of the belief that the 4-year cycle is still what dominates this entire market. And if that is the case, we should bottom sometime in kind of Q4 of this year, because that means we're already 5-6 months in to a 12-month bear market. So that's some good news, is we're already significantly off the high and several months into this thing. Not saying the pain is over. I'm not saying it can't get worse, but you're going to want to be ready later part of this year. I think that's when we can buy some really cheap Bitcoin, and that's something to always be excited about. Thank you so much for tuning in. This has been the second episode of the Crypto Closeout. Appreciate you all. We'll be back same time next Sunday. Shout out to Kraken and NinjaTrader Live for sponsoring the show. Ponzi, I'll see you then, brother.